am Dr. Amarjit Kaur. I am Professor of Accounting and Dean Faculty of Commerce and Management at Gurugram University, Gurugram, Haryana. I am a qualified certified management accountant and I am MBA from University of West of Scotland and PhD from India. I am author of 8 books and 48 research papers. This is my privilege that I am connected with you today, this afternoon, to discuss bills of exchange. This bills of exchange has been discussed earlier in part 1, and in part 2 I am going to discuss that how do we record bills of exchange in the books of DROI. So taking this in continuation from the previous part, the part 1, I will spend few seconds just for those people who have missed the part 1, that what is bills of exchange and how does it work, and after that I shall be discussing that how do we write the journal book for DROI in the books of DROI. Okay, so the bills of exchange is a negotiable instrument which can be negotiated in open market, means it can be sold and purchased in the open market. So what happens when any business sells something on credit? So there are 2 possibilities, that the person who sells any good or service to the buyer, he gets paid or he is not paid, immediately. So if he gets paid, then there is no need for bills of exchange. But if the person is not paid immediately at the times of sales, rather he gets a promise in writing that he will be paid in future, then the bills of exchange comes into picture. So how does this bills of exchange work? So this bills of exchange is a negotiable instrument. It's a financial instrument which is written by the drawer. The drawer means the person who sells the good, right? Who owns the goods, has sold it to somebody. So drawer is the person who writes it, and the drawee is the person who accepts it. So he says he accepts in writing by signing the bill that yes, I agree that I owe you this much and I will pay you on a particular date with interest or without interest. So terms and condition. So this becomes bills of exchange once it is been signed by the drawee. And the moment the drawee signs it, it is bills payable for the person. So we have to record from drawee's point of view in this session. Okay. So there are actually 3 possibilities when the bill is been sent to the drawer. The drawer can retain it till maturity, till the stipulated date in the bill, and then he gets paid or not. So either the bill is honored or dishonored. The second possibility is the drawer actually goes to a bank or to any non-banking financial institution who deals in bills and get it discounted. So when will that happen? When the drawer, the person who holds the bill, is in need of money, right? So he will simply get it discounted and get the money before the maturity date. So that's the second possibility. The third possibility is that the drawer who has the bill with him, he has to pay to somebody further. Because in any normal business, it's not that we have to receive the bill all the time or we have to receive the money all the time. We have to pay to few people, we have to receive from few people, right? So the sale and purchase happens regularly, frequently in any business. For all the sales I made, I may not make all the sales on cash. So certain credit sales, I will be receiving bill. Certain I may not be receiving bill even, I just be, so in that case they are just our creditors. But if I receive a bill from an unknown person, from a new party or new buyer, then I receive a bill, right? This is what if I wish, if we both agree, both the parties agree, right? So if the bill is received, then this becomes bill receivable for me and bills payable for the person who purchased it. Okay, so now I have also purchased from somebody as a normal business, as we were discussing. So if I have purchased from somebody and I need to pay, and I have 2 options, I pay immediately at the time of purchase or I pay later. When I decide to pay later, there are two possibilities. If the supplier is a known person to me, has been dealing with me from the past, he may allow me to pay later without asking me for any bill in writing, right? So bill of exchange without any negotiable instrument. So that can happen if the supplier is known and we have a frequent business terms and good business terms. So that is one possibility. But if the supplier who has sold me is a new supplier, the first time I am dealing in, he may ask that, okay, I sell you this much at this price and I will give you credit. This is the first dealing we have, but give me in writing that I will pay you this much on this particular date. So then you accept, okay, and what you do, instead of writing a new bill, you endorse the previous bill which you received from your buyer and you endorse it to the supplier you have, right? So this is the third situation, then the bill is been endorsed to the suppliers of the company who has actually received the bill originally. Okay, now in all the three cases, there are two possibilities, two scenarios. One, that the bill is been paid on maturity to either to the company itself, that is Mr. X in the example, or to the bank from whom we got the discounted, or to the Z person whom we have further endorsed. Or the second scenario is that the bill is dishonored and nobody, whosoever was holding, either I was holding as a business or my endorsed, or the person to whom I endorsed, the endorsee was holding or the bank was holding. None of them gets paid, right? So these are the three possibility. Further into two, it means so these are the multiple possibilities, which we discussed. Now, whichever the possibility could be, let's discuss in detail that in case I am writing books of accounts of a drawee. The drawee, the person who accepts, right? The person who has purchased good, person who was actually creditor to somebody. So the drawee, so how would he writes the books once he accepts the bill? So let's discuss that. So this journal book we are preparing in the books of drawee. So look at that slide. It says journal entries for bill of exchange in drawee's books of accounts, right? So the first scenario is when the bill is written by the drawer and accepted by you. So you means here drawee. Mind you, so we are writing the books of drawee. Okay. So the issue of bill. So by the drawee, by accepting it, by signing it. So you are accepting the bill and you are sending it to drawer now. So the drawer will receive the bill. So we will debit drawer's account, right, the person who is receiving it, and we will credit bills payable because that is my liability. I have accepted and I am writing my books now. So we will write being the bill was drawn and accepted by me. Okay. So I will debit the drawer, the person who wrote the bill and sent to you for acceptance. You accepted it and sent it back to him, right? And in that case, once you accept it, you will write drawer's account debit to bills payable account. So bill payable is a current liability, as we all know. Okay, and it would be credited, and the person whom you have sent this bill will be known as drawer's account. Okay, so this is the first transaction being recorded in the books of drawee. Now coming to the second transaction, that the bill is retained until maturity. So mind you, bill is not retained by you. You are a drawee, right? And we are writing the books of drawee. So let's use the logic. If the bill is retained by the drawer, because actually he owns the bill now. You have already sent it to send the bill to the drawer. The bill is no more in your possession. Okay, so So if the drawer is holding it till maturity, you as a drawee will not make any transaction, make any entry in your book account. Okay, so we will simply have no entry if the bill is being retained by the drawer in his in his hands till maturity. Okay, so moving further now. So in this case, when person has held the bill till date and presented to you and you paid the bill, so means you honored the bill. Okay, so what will happen? You have honored means you are paying, and we are writing your books. So if you are paying, your cash balance or your bank balance will go down, isn't it? Yeah, so I hope you are getting me. So your bank balance or your cash balance will go down, and the bills payable will actually become, we will remove the bills payable from our books, and bills payable will be debited. Why? If you remember, when we accepted the bill, we credited bills payable. To close this bills payable account in my books, I need to debit it. That's how accounting works. So this is a double entry system. I hope you all understand, because we are at an advanced stage of discussing bills of exchange, and I hope you by this time you would have already watched previous lectures on journal entries, basic normal rules of debit and credit. So by that rule only, if the bills of payable was credited when I issued it, once I pay it, the bills payable account will get closed in my books. Okay, in the books of Y, in the books of drawee I am talking. Yeah, so it would be debited. So we will debit bills payable account for the amount which whatever we paid. It could be 1 lakh, it could be 5 lakhs, whatever the amount of the bill was, that would be credited. Okay, and in the narration we will write the payment made against the bill. So this is the first scenario, that drawer was holding the bill and you paid to the drawer. So in your books you are debiting the bills payable and you are crediting cash or bank account. Now the second situation could be that you were unable to pay. That is also possible. You have written the bill maybe way back 60 days in advance. So 2 months ago, maybe 3 months ago, maybe even 9 months ago, and there are certain bills which are more than a year. That is quite a possibility. For long term projects, bills are written for very long duration, right? So let's say you wrote a bill 3 months ago. You wrote a bill in the month of January which was due in the month of April, and you were never aware that there would be a lockdown announced in the month of March, and you will have no cash, no liquidity to pay the bill in April, right? So we have experienced it in the recent past. This is the best example I can help you to explain, to understand. So let's say your bill, so I hope you could gather what I am trying to say. Bill was accepted by you in January in any business, you mean any business, and it was written for 90 days. So it means, 90 days means 3 months. So means it was due in the month of April, and mid-March, or your business was almost stopped. By the third week of March, 23rd March, there was complete lockdown in our country, and you have no cash in the month of April to pay even salaries. Forget about this bill. What will happen? So of course you will, this bill will be dishonored. The bill will be presented had the banks been opened, had there's a chance to present. So had the bill been presented, so you would be dishonoring the bill because you do not have money. What will be the transaction in your book? In that case, you will be again creating bills payable in your books, and your drawer's account, the drawer's account will be credited. So drawer account, whose drawer? The person. The drawer is the person whom you were supposed to pay originally, from whom you have already purchased. Okay, so you would be again creating this creditor in your books. So the entry would be bills payable account debit, drawers account credited, and in the narration we will write being bill dishonored. So friends, it's very, very important that we understand that, in any question, in any example, in any practice, that we need to remember whose books we are writing. In part 1, I discussed the books of drawers. The entry was completely, reverse. And at this moment, I am discussing when we are writing the books of drawing. My entry is entirely different. It's actually reverse what we discussed in the part 1. Okay. So this would be the complete entry when my bill is dishonored. I could not pay. My bills payable account would be debited and my drawers account would be credited. Coming forward, the next possibility is that the bill is discounted with the bank by the drawer. So just ask yourself, if drawer has got it discounted, do you need to actually make any entry in your books? No, you need not to. So you need not to have any entry in your books if if the drawer has got it discounted, right? There would be no entry in the drawer's book, remembering that we are writing drawer's book. Okay. Now the bank presents the bill at maturity because it has been discounted by the bank. So certainly bank would be presenting it at maturity for payment. So if you honor the bill, then what will happen? Your cash balance will go down or your bank balance will go down. So the entry you will pass in your books, this is Y's book, this is drawer's book, right? So bills payable account will be debited, cash account will be credited, and we will write that being payment made against the bill. Now you would be thinking that bill was discounted by the drawer, and what will be the amount of payment here? Because let's say bill was for 1 lakh rupees and the drawer got it discounted by paying 1000 discount. So you are Y. X is the person who wrote the bill. You are Y, you are drawer, and you accepted the bill. So bill was payable by you, becomes payable by you, and the bank, let's say ABC Bank. So what happened in the example? The X person who was drawer, he goes to XYZ Bank or ABC Bank, gets it paid by paying 1000 discount. It means the drawer will receive 99,000 at that point of time when X got it discounted from the bank. Now the question at this moment is, when you are writing your books and you are paying to bank, how much you will write? Friends, please remember, you owe 1 lakh. You do not owe 9,000. You owe 1 lakh, and your bank account would be credited in your books by 1 lakh. So you will debit bills payable for 1 lakh and you will credit your cash or bank account by 1 lakh. It means you will reduce your balance by 1 lakh, not by 99,000. That 1,000 discount is not your business. That was paid by that who has borne the cost of discounting? The drawer, right? So drawer has already paid that 1,000 to bank because to him the bill is over, unless there is some dishonoring. Okay. So the drawer has already borne that expenditure of getting it discounted from the bank, right? So you would be writing bills payable account debit and you will be crediting cash or bank by 1 lakh rupees in this example. Okay. Moving forward, if that same bill which is with the bank gets dishonored, so bank has the bill because the bill was discounted from bank and bank is holding until maturity and is expecting that the drawer will pay him. pay the bank, XYZ bank or ABC bank. So when the bill is dishonored, the bills payable will be debited in your account, in drawee account. Okay, so you will debit bills payable account, and you will again bring back the drawer to whom you have originally written the bill, right? So let's say X here. In my all examples, I am taking the same name X. So X is drawer, Y is drawee, Z is endorsee. Yeah, so that you could relate. So whichever transaction we discuss, the person remains same. X remains drawer, Y remains drawee, and Z remains endorsee. Okay. So we are writing drawee's books, and drawee could not pay. If drawee could not pay, the drawer, which means X, which becomes creditor again in the books of drawee, right? So my bills payable account will be debited, drawer's account will be credited, which means X account will be credited, and we will write being bill dishonored. Okay, so this is the entry. Now let's say there is a situation that bill is endorsed by a drawer in someone's name, in the name of Z here and the name of Z. Then what will happen? You are writing, my dear friend, the books of endorsee. Please remember that. You are not writing the books of drawer or endorsee. You are writing the books of Y, who is drawee here. And drawee need not to do any accounting transaction, accounting treatment in case the drawer endorse it to Z. Right? So drawer is writing to Z, that bill, same bill, he is endorsing it to Z. He will make the entry in his books of account, which we discussed in part 1. But in this case, when we are writing the books of accounts of drawee, we are not going to make any entry. So in this situation, there will be no entry. Now the fourth situation, the bill is with the endorsee now, right? Drawer has sent it to the endorsee. Bill was with him till the date of maturity and presented for payment. And when the endorsee presents this for payment, there are two possibilities again. One, that the bill is been honored by you, which means you pay it. And the second, that bill is dishonored, that you could not pay it. What will happen when the bill is been honored? Right? So the journal entry bill will honored means you are going to pay. So your bank account or your cash account is going to go down in your books of account, that is drawee's books of account, and bills payable account would be debited, because when you issued the bill originally to drawer, you have credited bills payable. And remember, when you have when the drawer has endorsed this bill to someone further, you did not pass any entry in your books of account. You don't know the person, endorsee, the Z person, you do not know. You are not dealing with Z. Z is somebody who is dealing with Y, right? Because Z has sold something to Y, not to you. So Z is a creditor in the books of X, not in the books of Y, and we are writing the books of Y. Okay, so please don't get confused. It's a very good and simple example. I am trying my level best to explain you that when the bill is been endorsed by the X and it's been sent to Z, Z was holding it and it comes to you for payment, but you have nothing to do when it comes to sale or purchase of goods. Okay, so the entry in your books of account would be that bills of account would be debited because you credited when you issued it, and then to cash you would be paying it. So you would be making a payment to cash, so the bills being paid. So this would be the narration that bills payable account debit to cash or to bank. Now this is the situation when the bill is been honored. But what if the same lockdown situation, or you are going through a very bad patch of business? There was some shipment which was lost. There could be some kind of fire. There could be some kind of loss of inventory. There could be any abnormal situation, and you are in a very bad shape of business. You do not have money when the bill is due for payment. You are dry, right? You are Mr. Y here. So what will happen? You may not be able to pay the bill. And remember with whom this bill is at this moment. This bill is with Mr. Z, who is actually the endorsee of Mr. X. Okay, so X company, X as a proprietor, X as a partner, you can take anybody. This could be any entity. So bill is with Mr. Z, and you are not in a position to pay. What will happen? The bill will be dishonored. So what will happen in case the bill is dishonored now? So you will again create a drawer in your book as your creditor, and the entry which you will pass, you will debit the bills payable. Mind you, when you issued this bill, you have actually credited bills payable. So you will debit bills payable account and you will credit drawers account, right? So we will write bills payable account debit, drawers account credit. So it means the creditor comes back again your books. And who is creditor in our example? Mr. X. So this is basically to Mr. X account. And in the narration we will write the bill being dishonored. Okay, so this is the complete discussion on how the books are written in the books of account of Mr. Y. I hope I was able to explain with you. So I can take 1 minute to give you some example. I can try to explain it further with the help of this small example. So in practice, this is how it happened. Just have a look at the slide. It says on 1st of August 2020, A sold goods to B for rupees 50,000 on credit. He drew a bill on B on the same date for the amount to be paid on 1st October 2020. B accepted the bill. So who is drawer here? Drawer is A. Who is drawee? B. And A got the bill discounted with the bank on 1st August at the rate of 12% per annum, the discount rate. On the due date, the bill was dishonored and noting charges were paid by A, which were 50 rupees. So the only one word which is new here for you is noting charges. If the bill is dishonored, right? So the bank charges the noting charge, which are basically paid by the drawer in case this bill is dishonored, because the bill this was the drawer who has got it discounted, right? So in this example, you should be understanding that who is drawer, who is drawee, and how this actually works. So it's not that we have been given exact amount of discount. It's a rate of percentage per annum. So this is the last term, the noting charges. I hope I was able to help you understand that. So with this, I would like to conclude this topic now. Thank you very much for being with me. Thank you, viewers.